This is our Forex blog for February 5th, 2014, and I pretty much spent all my day working on our trading signals. For those of you who don't want to have to learn how to trade, I don't think there's anything else out there better than these. You know, you have a nice big win here, small loss, big win, small win, loss, unfortunately. This one's about a break even, small win, 23 out at, about 10 pips actually. And we went long here because it was a narrow range. It was a breakout, so that's a big win, nice win, nailed the high, sold it all the way down to here, and also went along here, and even has a small win right here at 40. Fortunately, got stopped out here pretty much near break even and missed the rest of the move. One of the best ways of trading also is using our currency indexes. This lets you see visually what each currency is doing. And basically it's as simple as buying the strong currencies versus the weak. You can see the pound, it's above its hourly moving average, so its trend is up. It breaks from above to below its hourly moving average. You can see the weekly and the monthly trend is down. So when the real-time trend goes down and the weekly and monthly trend is down, it's likely to give you a lot of pips if the trade works. And that's the key to trading. Don't worry so much about win rates, winning percentages. Worry more about if the trade does work, this is going to give me a huge win, or at least 1 out of 5 trades is going to be a huge win, and those will eat up all the losses. And if you move your stop to break even pretty quickly, winning percentage is kind of nonsense if 30% of your trades are break evens. If you lose on 20 or 30% of your trades, you would say the winning percentage is less than 50%, but you only lost money on a very small percentage of your trades that didn't work. So let's take a look at this. The yen's going up, the weekly and the monthly trend is up, the pound is going down. So what do? You sell the weak pound versus the strong yen. It's as simple, especially when it breaks the hourly right here at 2 a.m. And as you can see, 2 a.m. it drops. You wait for a pullback, you get short, very small profit. Short here, big profit. You can see short at 33, probably out somewhere around 66 for about a 60 pip profit. And you also have fib targets to let you know when to get out of the trades. Fib targets, fib retracements. This is almost an ideal place to get short. Right at the 50 to 62% retracement usually is the best, and it went right to the fib target. And typically really strong trends will also work their way out to the Fibonacci profit target, somewhere around the 1.618 or 1.382 to 1.618. It's going to possibly have a reversal. And from this last drop, you also have a fib target off of that wave. So if you got short right here, it's kind of going sideways, you might get out, you short again when it breaks the low, you get out here at the fib target. After a currency has trended 2 or 3 waves, you might wait for a deeper pullback before you go short, or even consider doing a counter trend trade. And you can also draw trend lines on there and then project them off the lows. And typically extremely weak currencies will hit these areas. As you can see, it hit here, went slightly through it. This is a very high probability reversal. Now let's take a look at one more example because it's pretty late. I've spent the whole day working on trading signals. The Australian is pretty strong. The daily, weekly, monthly trend is up. And by the way, one of the easy ways of using our perfect oscillator is just simply focus on that when a strong currency is at the lower band, like right here, here, here. Notice it went up, up, up a little bit. So, one of these times right here is at 2 o'clock. The pound got weak at 2 o'clock, and the Australian is strong on all time frames. So guess what? The pound Australian is a great one to be selling at 2 o'clock also. And it actually broke down underneath this little sideways range here, pulled back up, and then just exploded to the downside. And if you missed that move, there was really no pullbacks. Any kind of tiny pullback right near the lows is a little risky. You can take the first one and maybe the second one, but if it doesn't go lower, it's more than likely going to bounce. But you can also see from 5 to 8, this went sideways. From 5 to 8, this one kind of pulled back. And if you go back and look at the pound from 5 to 8, this one just kind of went sideways a little bit to slightly down. Keep in mind the Australian also went down, so if both currencies are going down or up together, you're going to have kind of a choppy sideways non-trending market. You want to trade the currencies that are most trending. And if you see a currency like the yen that's strong, but you look at the daily chart, our currency indexes work on all time frames. Maybe it's been up 3 or 4 days in a row. So when it finally breaks the hourly right here, knowing that possibly it's been up 3 or 4 days in a row, you could sell this 50 to 62% retracement right here against a currency that's either strong or likely to reverse up. You can see the euro's trending up very nicely, and it had a little bit of a pullback. Typically the currencies don't go through our bands too often, and most of the time if they do, they have pretty violent reversals the other way. The euro is poised to go up. The yen is poised to go down here at 11. This is more of a short-term trade, but you could at 11 o'clock look for a euro-yen buy, and you can see it went up 136.90 all the way up to 40. It's a 50 pip move. Pretty much predicted by one currency that's been going up, and it's been up for a long time. Had a pullback, you're selling the retracement, and the other currency was kind of going sideways. It has a low here. The previous day's low, it couldn't break it, or actually last night's low, it couldn't break it, and when it went above the hourly and came down and found support right here, that's even a more ideal time to be buying the euro. The dollar was trending down. It's likely to possibly find some resistance here. Coming up to 9 o'clock, the euro dollar also is probably likely to go up. And it does. It took it about an hour to do it, though. At 9 o'clock on this pullback, if you look for buys, it kind of went up a little bit lower. When it makes new lows, you don't necessarily want to be buying, but as soon as it goes back into this little range right here, this is a false breakout. Pretty decent place to be buying right around here, 135.11, and it goes up to 46. Huge move. Which, by the way, our signals, I believe, caught that move. Actually, yeah, we did. We caught them right here. Then this trade at 10:12, a little bit earlier. No, that's about the same time. 10:12, we got that move. And in here around 18, and when there's a sell signal, you're out at the close. So we made 22 pips on that trade.